Hey, my name's James Nicholson. I hope you guys are well. I want to talk to you today about our interest rates just about to hit 8%. We've had an interest rate rise this week. We've had 14 consecutive interest rate rises in the last just over a year. What does that mean for us as investors, homeowners, and everything else? We're going to cover that in this video. So before we jump into it, do make sure that you like the video, guys. That helps us with the YouTube algorithm. Subscribe, hit the bell notification, and help us get to 100,000 views this month. You can do that by smashing both those little beauties over there. So let's talk about interest rates. Why are they rising at the moment? Why have they been going up and up and up? Well, most people know, but just in case you don't, it's because of inflation. And so inflation has been at highs that we haven't seen since the 70s. And that's caused by various different things. Mostly something called quantitative easing that happened during the pandemic, where the Bank of England just printed lots of money, which we've got to pay for now. Then we've had the war in Ukraine, and that caused an energy crisis that then helped food and drink and everything like that go up. Obviously, we had the pandemic. There's all sorts of things going on. And I probably missed some that someone will say in the comments. But look, inflation is high in a nutshell, and it needs to be around 2%, but it's been at 10%, or it was at 10% for quite a while, and it's stubbornly high. And where we're struggling in the UK is other countries have already got this under control. America, for example, has taken inflation all the way down to 3%. The European Union, a lot of places there are around 5%. We're at 7.9 at the time of recording this. Now, we're expected to get down to 4.9 by Christmas, but it's still really high. And inflation hits the poorer people in the country. It's just stealing money out of your wallet. And it's a silent tax that we really need to get rid of. And so what you'd normally do in times of high inflation is raise interest rates to stop people spending, because that takes money out of your pocket as well. It's not great. And so a higher interest rate means higher credit card payments. It means that you'll get better savings rates, or you should, if the bank pass it on. That will stop you spending in the economy. And that's what they want to do, is to slow down the economy. Then companies will then look at pricing, and hopefully they'll stop increasing the prices if they're not getting the volume of sales. This is how it all kind of works in a roundabout way. So what we're trying to do is bring down inflation. And because it's stubbornly high here, we've had 14 consecutive interest rate rises in the UK. Now, the Bank of England's rate currently sits at 5.25. And then the banks put their bit on top. And so during the mini budget crisis that we had at the end of last year, when Liz Truss was in charge, interest rates from the bank went way above 6%. The base rate, the Bank of England rate, was lower, but the banks would lend you at way above 6%. And that was carnage. And so our inflation isn't moving anywhere fast. And that's the problem we've got. So what we need to think about is the base rate going to go up again? Yes, very likely we're going to go up at least to 5.5%. And some analysts think we'll get to around 6% as a base rate. Does that then equate to you paying 8%? I don't know, and I don't think so. And the reason for that is banks borrow on what's called a swap rate. It's going to be similar to this, but it's not quite the same. And so they will borrow off other bigger banks, and they will borrow using an equation called the swap rate. And what we are seeing in the market is, even though the Bank of England are increasing rates, banks, lenders, more like lenders in the last week have actually been dropping the rate that they lend money to. And the reason for that is that banks need to lend money to make money. And so they need you to be borrowing from them. And so HSBC started this process a week ago, pretty much to the day, where they cut their rates. Then we had Nationwide do it. We had Halifax do it. We've had all the other big lenders now have started to get a little bit more competitive. And so even with increasing Bank of England rates, they're reducing their margins by being more competitive in the market. And so I feel that that's going to continue because the housing market is slowing down significantly. And so what we're seeing is there's 20% less transactions at the moment. There's 20% less property for sale on the market. So even if all of them sell, that's going to carry on for some time. And banks need to make sure that they don't lose 20% of their business. So they're going to try and make sure that they are the ones that get the business as opposed to their competitors. So this is good. And we could hopefully see a bit more of a price war between lenders in order to get funding moving, because they make huge fees on lending money out. Not just the interest rate, there's fees and costs involved in all of this stuff. And they want to make sure that they're still getting part of that action. And so could we hit an 8% rate? It's possible. It is possible. There are 8% rates out there on more difficult lending. And that happens all the time. If you've got something that's above a restaurant or a shop, that can be a problem. If you've got something that's unmortgageable, when you get it remortgaged, there'll be more looking into it and there'll be less options. If you've got a short lease, there's less lenders that will work with that. So there are options out there, but you've really got to make sure that you look at the right options for you. But 8%, I'm not sure. I don't think we're going to get there at this cycle unless next year inflation kicks off again. If that happens, all bets are off the table. We haven't dealt with inflation as well as other countries. So maybe our inflation has just been stubbornly high. It's going to come down eventually and then it will stay down. Maybe other countries have got different strategies for that. I don't know. But what I do know is that if inflation starts to tick up again, at that stage, all bets are off. So what would I do if I was an investor? Well, we're doing a new deal this week, and it's actually interesting. The new deal is actually better than my old deals. And so that's because I'm buying at today's money, right? So I know what the rate is going to be today. I know it's unlikely to triple. So if I'm looking at a rate today, I can get around 6%. It's unlikely that I'm going to get an 18% rate on that deal. And so the price of the property I'm buying has had to be adjusted to today's price to get that working in the market. Whereas the older deals were worked out at low interest rates. I've got one deal, checking my portfolio yesterday, I've got one deal that's fortunately on for a while. The interest rate is just 1.39%. Crazy good rate that we got back then. And that makes a big difference and will make a big difference to investors and stuff like that moving forward. If that goes from 1.39 all the way up to 6 or an 8% rate, it's going to be a huge increase in the monthly costs and payments on that property. So yeah, I don't think we're going to hit 8%. I know some do, but that's my thoughts on it. I think that you're going to see more competition from the banks. I feel that yesterday when the Bank of England, it's different, you'll be watching this a few days later, but when the Bank of England did their meeting, they're kind of indicating now that they're done, that we've done enough to push this inflation down. It's now just a case of waiting for it to come through. Anyway, that's my thoughts. I'm not saying we're going to 8%. I don't think it's happening. Let me know your thoughts below. Do check out some other content. Do like this video, guys. That helps us with YouTube. Do subscribe. And if you could help me, I want to get to 100,000 views. So why don't you spend some time and watch this video right here? That'll help us get there.